So here are some coins you should realistically be holding. No matter your experience, no matter what you do in this market, these should be okay long term. Hi everyone, welcome to the channel. If you are new, make sure you have subscribed, hit that bell button and obviously leave a like. Check out links below to courses and other good things, little rewards there and stuff. Now, yesterday's video, I spoke about you may well regret buying into crypto, maybe, who knows. And I've also done one a few days prior to that, was potentially looking at selling altcoins into Bitcoin for potential accumulation phases, which is kind of, yeah, go for it. But realistically, I'm going to go and focus on some coins that should be in most people's portfolios realistically. I'm going to kind of show you some sort of stuff that you can do on the chart in terms of when you can potentially buy. And I'm also going to look at passive income as well. So a little bit of a variety in this one. Now, obviously, the higher up you go, the more obvious things are going to become, right? Now, there's one thing that I'm pretty sure not everyone knows this, right? So, sorry, if you've been in the market for a while, I'm going to try and explain something very, very quickly. If you are new in this space, do not look at price. You look at market capitalization, right? So what this is, this sum, this mathematical kind of dollarage, it's like, that is essentially how many coins there is and the price. So each coin is worth, say, $1, right? And you've got 20 million of them. $20 million is the capitalization. That's it in very, very simple terms. However, when you start looking at variable kind of rates and certain elements between circulating supply, total supply, the price, it'll vary all the time. Now, personally, I always do circulating supply. I don't do total supply because it's what is in circulation that counts. You do have on, I think on this now, you have a fully diluted market capitalization, which is essentially, you know, say for example, you got a load of tokens locked up, you've got an extra 20%, you know, away from the market, it will include that. So when you are looking to buy your coins, it is not because, say, Dogecoin or whatever is 30 cents and it's going to go to $40,000. No, that's not going to happen. It is actually more to the point of what this column is. So you should be investing on multiples regarding this. So for example, Ethereum, right? Do you believe Ethereum is going to flip Bitcoin? If you do, well, you're potentially looking at a nice little 3 to 4x gain there. If you're looking at Polkadot, do you believe it's going to match Ethereum in terms of market cap? There's a potential 12x there. That's the point. Now, moving on. So you've got all these coins. You need to look at certain parameters. One, is there a team? Now, that sounds really, really odd saying this, right? Because yes, the decentralized world. Yes, projects make money, but ones without a team or an anonymous team tends to be a bit more wishy-washy, and you don't really want to put hard-earned money. If you're a full-time worker or whatever, or if you came from other markets and industries, chances are you don't really want to put your money into something that isn't really kind of transparent in that way. I believe that anyways. I know it's a decentralized world. It's kind of scary when you think that way, but realistically for me, have a team. If they have team members from the likes of Facebook, Google, PayPal, all kinds of good stuff, or investors from those kind of circles, chances are they've got money. If they've got money, the chances are they'll survive. That's kind of a very, very big thing, which is why it's important to look for things with capital backers. Now, the downside to this is if there is a fundraise or an ICO or whatever, they could dump on you. However, if they've been around for a while, that dumpage has probably already happened. They've already got their money. They've already kind of got investments within, essentially. So you've got to be careful in terms of your timing, which we will come on to timing in a bit in terms of when you can kind of buy stuff. Now, other things to look at as well is obviously use case. Use case is important. Now, you need to find ones with a solid use case that, in my opinion, could change the world, essentially, or make the space better. Some things don't have use cases at all. Even stuff in the top 20 do not have use cases. For me, the likes of Dogecoin, it has one use case, and it is to send money from another party to another party. Easy, right? Boom, boom, boom. That's it. You know, when you compare that to the likes of Cardano, when you compare that to the likes of Polkadot, even Uniswap, you know, there's totally different kind of like situations and use cases overall across the board. And that's why you've got to be careful. You've got to be careful in terms of one, how many you buy, i.e. you don't want to have 4 different coins that are like coin processing mechanisms. So for example, XRP and Stellar, would you own 2 of those? You probably only own 1 of them. The same with like, you know, certain types of blockchains. Would you want to have all the blockchains? Probably not. You'd probably want to go for the best ones. You know, all those kind of situations. How many DeFi protocols do you want? Do you want to have all the oracles? Ideally, you want to have a bit of everything, you know, realistically. So that's kind of important. Another thing to look out for as well is obviously roadmap and developments. Now, yes, roadmap's pretty wishy-washy. However, if you understand that you're buying something that isn't fully developed, for example, Polkadot as a great example. You know, they've still got parachains to come on, still got projects to go onto there. The likes of Zilliqa, they're growing, they're building their ecosystem, they've got all kinds of stuff coming. You need to look for stuff like that, so that's important. But realistically, what I'm going to do on this video is kind of give you some pointers in terms of what you can look at and realistically go with your own flow. Now, the one thing I mentioned yesterday in yesterday's video is essentially, when you're on Binance, you want to buy everything. You get really, really excited and you go crazy, don't you? You don't want to do that. You want to do your fundamental research. You want to look into it. And the way to do research is going to direct sources, which is, let's just look at VeChain. Go to CoinMarketCap, go onto VeChain, right? Your first bit of data is simple. Market cap, 6.7 billion. Diluted, it's a bit higher than that. Volume, not too bad. Then you go all the way down and look at the start of the, you know, markets. Where can I buy it? That's a good start. Then you go on historical data and you kind of can play around with this, by the way. It's not the greatest, but it used to be better. They've changed that. It used to be a bit wishy-washy. But realistically, you've got then the likes of news. You've then got the likes of social media. Where can you find them on socials? Then you've got the likes of ratings, where you may well find, yeah, you get it on here, you can actually read reports and read fundamental like reports from obviously other places and external sources. Then you've got stuff like analysts, which I don't think that's on there. But don't worry too much about the price estimations. But the main thing that you want to go on to is essentially the websites. Go to vchain.org and go, wow, I'm going to read it all. I'm going to be very, very happy. I'm going to be bored tonight because I'm going to fall asleep because it can be quite boring. However, some people like that sort of stuff. But realistically, you then go and read through their websites. You go onto like certain verified sources of where their documentation is, such as their Medium pages and stuff like that. So that's a point. Anyways, moving on. Other things that may weigh into your decision as well is passive income. This is a website called Stake and Rewards. Very, very simple. Now, it may sway you a little bit that, well, actually, I might just want to buy Polkadot because I can get, you know, 13% rewards back by staking it on my ledger by pressing one button, having only one dot working for me, and I can make a little bit of passive income. Woohoo, right? You may look at other coins as well, such as, you know, the likes of Avalanche, Cosmos, places like that where you can do the same sort of thing. Tezos, Luna, you know, EOS essentially in certain places. You can earn passive income from these. Now, how do you do this? Go to Staking Rewards, basically go to Crypto Assets, and you can press on this button here. If you press on the staking button, staking essentially for security, governments and all kinds of good stuff like that, so it's actually relatively good for the ecosystem. So stake it, lock it up, and you can see here, locked up in Cardano 74%, you got locked up in Polkadot 63%, but you can see the rewards. So would you like to hold Cardano for long term as a long-term investment because you believe it's going to go higher? Maybe. But would you hold it even more so because you can get a percentage of 7.26% back per year? You know, are you going to get much better than that? Probably not. Same with the likes of DeFi situations as well, a bit more, you know, sporadic, but realistically also, you know, pretty solid in terms of what you can do. Obviously, you got all kinds of stuff here in terms of what you can do. These are bit higher, a bit more speculative, but either way, if you want to use these DeFi platforms, you want to earn the native currency, why not? And then you've got the likes of stable currency. Now, this is obviously a little bit different because it's stable. However, if you're using DeFi protocols and you've got stable currency as an investment or profit, guess what? Winner. You can earn some nice passive income. Anyways, going to go to the chart. I want to show you a few little tricks in terms of trend management because buying and selling is important. So the one thing I want to touch on obviously here is a dominance chart. Again, mentioned it a few days ago, sorry. When's the time to buy into altcoins? When's the time to sell, right? For me, right now, with the dominance doing that, it's kind of, you should realistically not be in as many altcoins, you should be in more Bitcoin, because if this goes up, your Satoshi value is going to get absolutely plummeted, whereas you can then use that Bitcoin to buy even lower, using the BTC chart, then therefore flipping it for more Bitcoin instead of USD. However, if we are just going USD only, we're just going to make it nice and simple. So what we're going to look at, we've already mentioned it a few times, look at Cardano. So what I'm going to do, obviously clear off essentially what this is. Potentially we could be going to $1 if this carries on going where it is, but we don't really want to look at that. what we want to look at overall is the higher time frames. Obviously the 2-day, the daily, the 3-day, all kinds of good stuff. Now there's all kinds of different kind of variations you can use on these charts. Now personally I use the EMA 21. It's up to you if you want to use that, but you've also got stuff like this. So these are, I think this is a 50 and a 200. This is essentially the death cross, or the golden cross sort of situation here, where, yeah, it's a bit wishy-washy. If you go to the log scale, it may make a bit more sense. There you go. So if you go to the log scale, you can kind of see how it kind of works. It doesn't really work in the same vein with the log scale because it is a bit wishy-washy when you go onto that. But realistically, if you are looking overall, you know, it's a 50 period moving average and it's a 200 moving average crossover. That is essentially it. Now, if I take off log scale and let's just zoom in as much as we can, there we go. So essentially what the game is here is you would look to buy when it crosses over. It's like a very, very long-term kind of metric. It doesn't really work well in crypto, I don't think. But in terms of entries, if it has been quite steady and flat, you can look at it as a reference point. However, what I recommend is something a little bit faster. If you are relatively inexperienced in this space, and I'm going to say this now, you want to have two, but you also want to have it a little bit closer together so it kind of does the magic for you a little bit. Now, this is, if you go to like the 5-day chart and look at this, a bit more interesting. So when you start looking at this, this is essentially on the 5-day chart, the moving average 10 and the moving average 20, right? That is it, simple as that. And again, this is a sort of situation. Now you can use all kinds of different combos. You can use different time frames as well. This actually works really well on the daily time frame as well, in terms of just basic trend management, because the EMA the moving average 20, is relatively strong. It's strong overall in the course of a stock market, but realistically, it's better for the higher time frames. It's better for the likes of the weekly time frame because it has a bit of a better gap. It's also a lot closer than the likes of the death crosses and the golden crosses and stuff like that. So you can kind of get in and out a little bit safer, a little bit better. And naturally that moving average 20 acts as a really good, solid support level. There's other situations you can look at as well. Personally, another one as well is the moving average 8 as well, which is quite common, and the moving average 13. But if you offset it to a +1, it makes it a little bit more interesting. You can use this mainly on like the daily time frame. If you're a trader, there's all kinds of situations, but for me, I prefer using just the one indicator, which is essentially the EMA 21, and it works pretty well, right? Realistically, if you're looking on the higher time frame and you're looking at this is a 3-day chart overall, it makes it less noisy, it makes it more interesting. And the way it is you're looking at this as a level of support. Once it is support, you can look to buy. Once it actually is no longer support and it becomes then resistance, you may want to just wait until it comes support again to buy in. So for example, with this, you're looking at this overall and you're like, yeah, cool, but no one's ever going to catch tops. Realistically, I've mentioned this on other videos, if you start seeing stuff go far too far away from the moving average 21 or something like that, or the EMAs that you're using, they tend to slap back as a bit of an elastic band effect. So no, this is kind of like the time where you'd be like, looking, well, I should be taking profits right now. This is a 3-day chart as well. It's not like you haven't been given warning. And this is where people start catching better moves and better obvious profit taking. Same with the BTC pair. Again, similar sort of situation. You know, you can see here how it's kind of really elasticated away from it, but now it's kind of pulling all the way back. It's going back to its average price, which essentially that is what it acts as overall on that moving average 21, which is, in my opinion, pretty important. Moving on to the likes of Bitcoin as well, works very, very well. As you can see, it's below it. So for me, I'm not going to be buying any Bitcoin just yet until we get a fully confirmed, you know, higher low essentially, or we start basically going above this EMA and we'll start looking at potential areas. Now, if you do want to do chance buys, go for it. There's nothing wrong with that. However, that being said, you may fall lower. You don't want to be buying the dip that keeps on dipping. If you're happy to do so, if you've done your research and you're thinking, let's just say, for example, we'll look at Polkadot here. You know, if you were like thinking, wow, it's like 16 cents, $16, $17, like wow, yeah, cool. But also realistically, it might actually go back down there because you are below those certain elements of the EMA, which is then indicated as resistance. So it needs to get above that to carry on going on its merry way. So I hope that helps in terms of timing. But again, you can see here how personally how I like to use this one, like that perfect levels of support. But as you can see, every time it pulls too far away, it likes to pull back. Pulls too far away, it likes to pull back. That is where you do it. And that is essentially what I teach on the total 2 chart. If you go to the total 2, moving average 21 works very, very well. Every time the market went to stupid levels, take a little bit off the table, and then obviously we're now below it. So this is now interesting. So EMA 21 is my perfect choice. Everyone's different. Personally, if you're a beginner, sometimes a crossover helps, but realistically, as long as you know how a moving average works, as in candles are above it, it's then support. If it's below it, it's then resistance. Keep it simple.